If the US and Iran go to war, you won't have to live in the Middle East to feel the effects. In just 72 hours, the whole world, including you, will feel the heat from gas prices, financial markets, and global crises. Analysis of the negative impacts of a US-Iran war. If war were to break out between the United States and Iran, it would not only shake the Middle East, it would send shockwaves across the global economy. Here's a breakdown of the key negative impacts. 1. Global economic instability and the return of inflation. A conflict in the Persian Gulf would likely send oil prices soaring to $100 or $150 per barrel. That would ripple through. Transportation costs, e.g. shipping, flights, trucking, increase dramatically. Manufacturing becomes more expensive due to higher energy and input costs. Consumers in oil-importing countries like Japan, Vietnam, or Germany would feel the pressure at the pump and at the supermarket. Example: a small business owner in Southeast Asia may face 30–40% higher import costs for raw materials, reducing profit margins and triggering layoffs. 2. Financial markets. Turmoil and capital flight. Global stock markets could plunge as investors shift to safer assets. Currencies of emerging markets would depreciate due to capital outflows. The US dollar, gold, and government bonds would surge as investors seek safe havens. Example: a young investor in Europe could lose half of her portfolio in 2 weeks, while institutional investors retreat to US Treasuries and gold ETFs. 3. Supply chain disruptions and rising logistics costs. The Strait of Hormuz is a choke point for about 20% of the world's oil supply. If disrupted, shipping delays and container backlogs could occur worldwide. Product shortages would affect everything from electronics to food staples. Retailers and manufacturers would struggle with rising freight costs. Example: a factory in Germany that relies on parts from India or the Gulf may be forced to pause production due to shipping delays or surging freight prices. 4. Slowing economic growth and risk of stagflation. Central banks may be unable to cut interest rates due to oil-induced inflation. Household spending would shrink under higher prices and uncertain job markets. Economies could face the dreaded combo of low growth plus high inflation, stagflation. Example: in the US or EU, consumer confidence drops while wages lag behind, pushing the middle class into tighter financial conditions. 5. Geopolitical tensions and risk of wider conflict. Allies like Israel, Saudi Arabia, or Hezbollah, Iraq, Syria could be pulled into direct combat. Russia and China might provide indirect support to Iran, turning the conflict into a new kind of proxy war. International cooperation would weaken, and global divisions would intensify. Example: the UN Security Council could be paralyzed by vetoes, and economic sanctions may further destabilize markets and alliances. War always brings disruption, but it also creates sharp economic shifts and opportunities for those who can anticipate where the trends are heading. Below are several potential opportunities. 1. Gold, silver, and safe haven assets. Gold is expected to surge as investors seek safety, creating strong opportunities to invest in physical gold, gold ETFs, or gold mining stocks. Other traditional safe haven assets such as the Swiss franc, Japanese yen, and U.S. Treasury bonds will also be in high demand. 2. Energy, especially oil, gas, and alternative sources. Oil and gas stocks like ExxonMobil, Chevron, Shell, and energy ETFs such as XLE are likely to rise significantly. Oil-exporting countries like Qatar, UAE, Canada, and the United States may benefit from higher global oil prices. At the same time, renewable energy sources, solar, wind, hydrogen, will gain attention as the world looks to reduce dependence on the Middle East. 3. Defense technology and cybersecurity. War typically leads to increased global defense spending, benefiting companies in military technology, drones, and smart weapons, e.g. Lockheed Martin, Raytheon, Northrop Grumman. Cybersecurity becomes a top priority as digital warfare expands, boosting companies like CrowdStrike and Palo Alto Networks. 4. Logistics and supply chain alternatives. Domestic logistics firms or companies with networks that bypass the Strait of Hormuz will likely benefit. Neutral and stable countries such as Vietnam, India, and Turkey could become key hubs for diversified supply chains. The smart warehousing and modern logistics sector will also find opportunities for expansion. 5. Cryptocurrency. Crypto. In the short term, Bitcoin and Ethereum could be viewed as alternative safe haven assets, leading to potential price spikes. However, extreme volatility and the risk of regulatory crackdowns during a crisis make crypto a high-risk, high-reward option. Want a deeper analysis of each section? Subscribe and drop a comment below. Let's explore it together.